Let's start. Yes. So hello everyone and welcome to, I've got a quick Q&A. Hi, John. Yeah, hi John. If it's okay, can all of you talk in the chat box instead of the Q&A section so that I don't have to monitor two sides? I will still see the Q&A once in a while, but on those who are on Zoom, it's better if you guys can talk on the chat box. Okay, so hi everyone. Welcome to today's exclusive webinar brought to you by Vantage. I'm really excited to have you here because we're going to talk about something that is really, really important. It is something that I resonate a lot as a trader. Okay, so today's topic will be trading psychology, biases, and self-discipline. I know some of you don't really spend time, put in the effort to learn about trading psychology because it almost comes off as if it's like motivational talk or whatnot. But I can tell you, if you don't get your mind in tune in trading, you are not going to be profitable. I've attended a course before, and then I remember that time I was just a beginner, okay? I remember the speaker saying that if it was up to me, the only topic that I want to teach is trading psychology. I don't want to teach anything else because there's no use learning technical analysis. There's no use learning fundamental analysis. If you cannot get your mindset in the right place, you are still going to lose in trading. In fact, the mindset is the most important thing. I think it's like 80%. Okay, anyways, we're going to talk about that today. Okay, so before we start, I know there's a lot of you, so I'm talking more to the people on Zoom. Sorry, those who are on Vantage app, the chat is moving like crazy. There's a lot of like, I see some questions, I see some of you saying hi, I see spam messages, but yeah, so let me communicate more to those who are on the Zoom app. Hi everyone, where are you guys from? I do want to know, and how long have you been trading for? Are you guys in profit this week? Let me know your journey in trading so I have a sense of the room and I have an idea of where everyone is from. South Africa, Mexico, Australia, Philippines, 5 years in trading. The UK, oh nice. Uganda, nice. India, Germany, Kuwait. Okay, we've got an international crowd here. I mean, expected. There's 1,000 of you here today. Thailand, Hungary, five 5 years trading. 3 years trading and in tears. Okay, I'm so sorry to hear that. Nigeria, Hungary, Singapore, Malaysia. Okay, cool. We've got an international crowd here. I love that. I love that so many of you are here to like, you're putting in the time to learn about trading. Yeah, so today's topic is very simple. You don't actually need to come on a webinar to learn today's topic, but it is good to hear it from a professional trader's point of view. I can tell you that it will really help you guys. Okay, so I'm gonna start today's webinar because I do want to finish and then get to do a little Q&A if we have time. So before we jump in the juicy stuff, you guys already know how this works. Just take a moment to look at this slide. Okay, so it's a good old disclaimer. You know I cannot proceed without this like legally. I cannot because I need you guys to know that today's session or any session that we hold for you guys, that any broker hold for you guys is purely educational purposes only. Okay, it's only for educational purposes. So what that means is I'm here to share concept, tools, ideas that have worked for me and for many traders, but none of this means that it is direct financial advice. Okay, trading, especially leverage products like CFDs and Forex, carries significant risk. There is no such thing as guaranteed profits. And if anyone tells you otherwise, run away fast, okay? Please don't believe those people on the internet, okay? Those people who like, I bought a Lamborghini overnight. Oh, trading has changed my life. I've made 100,000 last month. Okay, please. Please, those people probably make more money from YouTube than they actually do from trading. Okay, please do not get scammed. Please be cautious. So whatever we're doing today is, I hope, is going to help you understand and love the market more and how the market operates and how you should operate as a trader. But other than that, please take this purely as educational and nothing else. Okay, I'm gonna stay here for a minute so you guys can read it. Okay, those who are on Vantage app, Vantage just got a text from Vantage saying that they fixed it, should be working fine now. It's still not working fine for me, but if it's she's okay, it's fixed. It's working now. Okay, thanks everyone. Thanks for those who highlighted as well. Okay, I'm gonna move on. Okay, so let me take a moment to introduce myself properly for those who are, who've never seen me before. For those who's been here week after week, you know who I am already. This is more for those who are new here. My name is Cassandra. Yes, that's me with makeup. I'm currently working, so I didn't bother. But anyways, my name is Cassandra. You guys can call me Cass. I'm both an investment analyst and a prop trader. I'm part of a group called Everyone's Fortune Group, which is a research firm that's been recognized internationally. We're the finalists for the best Forex and equity research for multiple years running under Global Industry Awards. Okay, this is not just like an award that someone created from their garage. Okay, so we've worked with clients ranging from brokers to institutions to banks to financial people to anyone who is basically involved with the markets. Okay, and that recognition really stems from clarity, depth, and actionable insights in the research we produce. So our team do a lot of back testing. We do a lot of forecasting. We spend a lot of time on the charts. We look at the charts a lot. Okay, we even have tools and indicators that we use on our own that we have created. Okay, so other than that, as a prop trader, I personally trade the live markets using firm's capital. For those who might not be familiar with the term prop trading, it means that you're trading with companies' money, not your own. They fund you. To get funded, you have to pass a test. The test, when I took it, was not that easy. You have to do 10% profit. I wouldn't say it's hard either because I do it very consistently. 10% profit to me is it happens for me quite a lot. It's not difficult, but it's not exactly hard. It's not exactly easy. Okay. So I had to do 10% profit within 30 days within a month, which is 22 trading days, because Saturdays and Sundays are not counted. And there's also very strict rules, like you cannot trade during news hours, you cannot trade, you cannot have a drawdown of certain percentage. You know, like how some people don't use a stop loss? Yeah, you cannot do that if you are a prop trader. Okay, so why am I sharing this? Okay, I'm sharing this so that you guys know that you are being guided, or whatever I'm sharing with you guys today is from someone, the information I'm sharing is from someone who is I consider myself a professional trader and who is in the markets a lot. So I hope whatever I share with you guys today is valuable and it helps you guys get to the next level in trading. Okay. Again, whatever I share with you guys today is just my own personal opinion. Okay, it is my own style of getting me to where I am. Okay, but it is not for everyone. Another trader might tell you something else. But I mean, it's trading psychology. Today's topic is trading psychology. Trading psychology should be the same for everyone, I think. Right? Okay, so the agenda. Oh, by the way, where are you from? Okay, I am actually based in Singapore. Okay, you know, we're the financial capital of Asia, of Southeast Asia. Okay, I'm based in Singapore. Our team is based in Singapore, and yeah, I see the attendance list and I see familiar names, like not familiar names, but familiar sounding names. So I assume you guys are from Malaysia or Singapore, just like me. Hey, but yeah, I'm from Southeast Asia. Okay, so our agenda for today is what is trading psychology, key cognitive and emotional biases, overtrading, FOMO, and impulse control, and building a structured plan, journaling, rules, and resilience. Okay, again, sorry for those who are on Vantage app. I totally just cannot see any questions because the chat is moving like crazy. It has not stopped moving from the minute I started the webinar. Okay, so yes, if you have questions, I'm sorry. Okay, so let's start. I do want to finish the slides quick so that we can go into Q&A, because I think some of you would have questions and I wouldn't be able to answer your questions if I cannot finish the slides. But again, you guys can ask me questions along the way and I'll just answer it as I go. Okay, so what exactly is trading psychology? So when we talk about trading psychology, what do I actually mean? At its core, trading psychology is about, I mean, it's not just about mindset, right? I know when you think psychology, you think, okay, it's just like my point of view, like my mindset. Okay, it's not that. It's also your emotions. It's also your behavior when interacting with the markets. You are so fast. Am I moving? Am I talking too fast or am I talking too fast? Should I slow down? I'm so sorry. Okay, so it's not about the charts or the indicators. Okay, I'm gonna slow down. So sorry, I try to talk fast so that I can finish and then we can, have more time to talk to each other. But I get that a lot. So it is a thing here in Singapore where we talk really fast. It's okay for me, but not for others. Okay, yeah, I see a few people saying that I'm talking too fast, and some people saying I'm talking. It's okay. Okay, I'll just go at this speed, okay? It is a Singapore problem though. We talk really fast here and we walk really fast as well. We're always in a rush to get to places and finish stuff. Okay, so it's not about the chart or the indicator, it's about you. Okay, it's about you and the market. So think about it. Every single decision you make, when to enter, when to exit, and how much risk to take is filtered through your psychology. And here's the kicker. Okay, you can have the best strategy in the world, okay, but if your psychology is weak, your emotions are unstable, you'll still struggle to be consistent, okay? So that's why many professionals say trading is 20% strategy and 80% psychology, right? Do you guys agree with me? I totally agree with this. Okay, so strategy gets you in the door, but psychology determines where you can actually stay in the game. I always say this, I say this for all my webinars, for anyone who asks me in trading. Trading is a marathon. It is not a sprint. You're not here to get rich quick overnight. You are here to get rich quick over time and get rich quick long and abundantly. So you cannot just go in trading with a gambling mindset. I don't know what videos you guys see or what brought you guys to trading. I feel like for a lot of people, it is those videos on like YouTube or social media or whatever it is where people are saying, oh, I made $100,000 last month. Oh, I bought this Ferrari. Oh, I retired my mom. I retired my parents, blah, blah, blah. I can tell you honestly, I can really, really tell you guys honestly, those people probably made more money from their social media, from their YouTube than they did from trading. Right? I mean, there's just I don't have stats, I don't have evidence or proof about it. This is my point of view, and I think that's what I think is happening. Okay, these people with all the fluff. A real trader will never encourage you to like overtrade or like do things you're not supposed to do. Realistically, I'm gonna tell you guys right now, realistically, I do 10% profit on a good month. Okay, these traders online are encouraging people to do double your account. If you put in $1,000, you're gonna get $2,000 by next week. Okay, that's just dangerous. That's just irresponsible, dangerous, and encouraging very bad behaviors in traders. Okay, so for me, I do 10% a month. I don't know if you guys think that is good, but for me, I trade on a $300,000 account. So 10% for me is 30,000. To me, that's a really good month. That's a really good month. I'm happy with that, right? And a professional level trader actually does 6 to 8%. And I'm on most months I do 10%, sometimes I do 8%, sometimes I do 6, sometimes I do 4, sometimes I don't trade. It's very rarely that I'm negative, but yes, that should be your expectation in trading. It should not be, I get in with $1,000 and then I double it within 2 days. Okay, that's just irresponsible to think that way, and that's why you need to fix your trading psychology so that you don't end up losing your account because you have unrealistic expectations. Okay, so why does trading psychology matter so much? Because emotions drive behavior. So the two biggest emotions in trading are fear and greed. Fear makes you close trades too early. You see small profit and then you start to panic and then you think, okay, this is going to disappear, so I'm just going to take profit now, right? Greed makes you hold losing trades too long, hoping the market will magically turn in your favor. And impulse control, that's when you click buy or sell without a real plan, just chasing what you see on the screen. That's also like revenge trading. I'm sure all of you has experienced this. I have experienced this. I have been trading for 9 years and I have not been profitable for the first 6 years of my trading journey. I think it was 5 years actually, 5 or 6 years of my trading journey. I've actually only just become profitable in the last few years. In my 9 years career as a trader, I've only just been profitable in the last few years. So please get that in your mind that you are not supposed to get rich in your first week of trading or your first year of trading. That's the same with anything. Honestly, if it was that easy, right? If it was that easy, we would all be rich, okay? It is not. That's why. That's why you have more losers than winners, okay? So these emotions that you are feeling when you are trading, fear, greed, feeling like a failure, feeling like, oh, this is not for me, okay? This is a natural feeling. This is a natural emotion. Everyone feels them. All traders feel them at some point. It's you, me, it's professional traders. I personally know someone who used to manage, okay, pay attention, used to manage $200 million. Okay. I personally know someone who used to manage $200 million until one day he kept losing and losing and losing and losing until it came to a point where he had to take like a 2 years break from trading. Okay, so this is the real reality for even professional traders. So if you are a beginner, if you are a retail trader and you are experiencing losses and you're experiencing challenges, you don't even need to feel like you are a failure or you're not good at whatever it is. Everyone goes through this, okay? Everyone feels them. Okay, but the difference between the amateur and the professional is the pros to know that is that the pros know how to manage them. They don't let fear or greed or impulse make the decision. They let the plan do the work. Okay? So we'll go to that in a bit, but you just basically have to detach emotionally if you want to make it in this journey. Okay, let's not talk about trading. Let's just talk about anything else in life. Let's just talk about like business, losing weight. Okay, let me think of other endeavors. Whatever it is you want to achieve in life, you really, if you're going to be emotional about it, you are not going to see a lot of success. It doesn't have to be trading. It's just that with trading, it's more like it affects more, emotions affect more, but every aspect, any endeavor that you try to accomplish in life will require you to kind of be very focused, kind of be disciplined and not be emotionally affected. Okay, so here's the good news. Trading psychology is not something you're either born with or not. Okay, everyone can develop a very good trading habit. Okay, it's a skill. Okay, to give you guys context, I am not someone from finance. I am not someone from who has an economic background. I studied law, yes, like a lawyer in university. There's nothing to do with numbers, nothing to do with the charts, nothing to do with patterns. Okay, it's just words. Okay, I studied law in school, and after that, I didn't even become a lawyer. I went to go on to become an air hostess. I was an air stewardess for Singapore Airlines. Okay, so I'm sharing this with you guys so that you know that even someone like me who's like not from this background can make it. It means that someone from whatever background you are from, you can make it as well. Okay. So after I became an air stewardess, that's when I joined the bank. I joined the bank, and then that's when I started to refine my trading skills. I started to go into the finance sector because that's what I really, really wanted. I really enjoyed looking at the markets. I really enjoyed sitting in front of a computer. I really enjoyed, this is what I enjoy. But if you don't enjoy this, you might want to consider, I'm sorry, I'm going to tell you the ugly truth. You might want to consider not being in this field because those YouTube videos and those in social media videos make it seem way, way, way easier than it is. It's not as easy as they make it seem. You do actually need to sit in front of the computer and put in the work, right? Okay, so right now, as of today, I can go on the charts and come up with an analysis within 5 minutes, but it took me 9 years to get to this level. Okay, so just like technical analysis, it can be learned, practiced, and improved. It starts with a lot of self-awareness, being able to identify your own emotional triggers, then discipline, building the habit of following your plan no matter what your feelings are telling you, and finally, resilience, accepting that losses will happen, but instead of taking them personally, accepting that losses will happen means that you don't take it personally. You just know that everyone somewhere, somewhat, someone is losing something. Okay, you're not special. Okay, to make you feel better, if you get emotionally affected when you're trading and you lose, let me tell you something. You're not special. People are losing every single day. Okay, people are losing every single day. You should be taking them as a lesson, so you don't repeat the same mistakes instead. This is why you spend time talking. That's why we spend time talking about trading psychology, because no matter how complex your strategies get, if you don't master your mind, you're always going to find yourself back at square one. Okay? Can you guys let me know if you guys are facing any challenges in trading? Like, I do want to know your journey in trading. Like, what are you guys facing? What's your daily risk to reward? I'm assuming RR means risk to reward, right? My daily risk to reward, I don't have a daily risk to reward. I trade one time a week. I know some of you may be shocked because I've got my trading psychology to that point. My mental strength when it comes to trading has gotten so strong to the point that I trade once a week. And my once a week, okay, like some people are like, oh, how do you make 10% a month? It's not easy. I won't say it's easy because not everyone is doing it, but it's not that hard either because, okay, it's important to say that I make 10% a month consistently, okay? Consistently. The key word here is consistently, because I know some of you are thinking, what are you talking about? I made 100% yesterday. I doubled my account because you over leveraged and then you over traded. You over leverage. That's going to be a one-time thing. You won't be able to consistently do that, right? You won't be able to consistently do that. So a successful trader is someone who can consistently be profitable. So I do 10% a month by aiming for 3% a week. So my risk to reward every single trade, not daily, per trade is 1 to 3 minimally. 1, 2, 3. I'm gonna write that down. 1, 2, 3. So if I have a $100,000 account, I am only risking $1,000 at any given point of time. Okay, if it grows bigger, then I risk more. If I lose, then I risk less. And when I win, I make $3,000. Does that make sense to you guys? I risk 1% to make 3%. I flipped 10,000 to 100,000 in 1 month. I didn't understand the psychology and lost it all. And I can't step up since. Okay, yeah, this is for you. Don't worry about that. I've also lost like close to many thousands of dollars, and then I eventually flipped it over. You really just need to work on your trading psychology first before you can work on anything else. You really just go and like read books on trading psychology. Total loss over 1 million. Dude, stop. You need to stop. You need to stop trading. You need to go on a break. Are you a scalper, intraday trader, or a swing trader? Okay, I would say I am a day trader, but my trading psychology has gotten so strong to the point that if I don't see a really, really high probability analysis, like if I don't look at the trade and immediately feel, yeah, this is definitely a winning trade, I don't get into the trade. Even if just one single thing gives me a doubt that this trade is not going to make it, I immediately stay out of the market. I immediately stay out of the market. That is the level that you need to get your mindset to be profitable in trading consistently. What books do you recommend on trading psychology? Okay, there's this one by Jesse Livermore. I can't remember the name of the book, but it's by Jesse Livermore. He's known as the #1 trader in the world. Okay, I want to be as realistic and I want to be very realistic with you guys, okay? Whenever I do this webinars, you guys, I want to be 100% honest. So Jesse Livermore, if you Google him, he is one of the best traders of all time. He's made like hundreds of millions in like 1938, if I didn't get the year wrong. Do you know how much money is 100 million in 1938? That is so crazy. That's how much money he's made from trading. And this is from zero, okay? He's made so much money, but he eventually committed suicide, I think, because he lost everything. And that still brings everything back to trading psychology. Okay, he had eventually lost everything. He eventually lost everything and then committed suicide. Okay, so read his book, but stick to the rules of the book. I think they wrote the book about him, but he himself didn't end up following the trading psychology because we are all humans. Even if we are disciplined for now, there is one day we're going to be slipping. Like someone here who shared that they've lost $1 million. You are slipping and you need to take a break. You need to step away, realign yourself, and come back. Okay, I'm gonna continue. Key cognitive and emotional biasness. Okay, all right, let's talk about biases. Okay, what do I mean by that? In simple terms, biases are mental shortcuts, patterns of thinking that our brain creates to make decisions faster. Sounds useful, right? Okay. The problem is in trading, these shortcuts often lead us to wrong conclusions and bad trades. Here's the tricky part. Most of the time, you don't even realize you're being biased. Have you guys ever looked at the chart before and you keep telling yourself, oh, EUR USD is a sell. It's freaking moving in an uptrend, but you're like, no, I want to get in on a sell. No matter what, I just keep seeing a sell. It's making higher highs, it's making higher lows. But for some reason, you have made the decision in your mind that it is a sell. Okay, this is what I talk about. Mental biases in trading. Okay, it's unconscious. You're looking at the charts and thinking you're being objective, but actually your mind is filtering information based on the past experience, your emotions, and even your recent trades. That's why I personally, every single time I go on the trade, I erase all my analysis and I start from zero because I need to see from a fresh lens. I need to see from a fresh point of view. Okay, obviously it depends on how I'm trading. I have different strategies for different charts. If I'm trading XAU USD and Ethereum, I'm using Elliott Wave. For Elliott Wave, I cannot erase all my analysis because then I have to start from zero. But if I'm using like price action and I'm using support and resistance, I erase everything on the charts and I rechart and I reanalyze because I need to see it from a fresh point of view. I don't want to have any form of bias because biases are so dangerous. They shape how we interpret signals, how we convince ourselves a setup is valid, and how we justify taking trades that deep down we know we shouldn't be taking. So think about it. How many times you have started a chart and said, I just know it's going up, but you know, it's clearly on a downtrend. You just need to ask yourself why you're doing that. Okay, so this is what I'm talking about when I say cognitive biases. Okay, so first is confirmation bias. Okay, this is when you only see evidence that support the trade you already bear chart or indicators. Bear chart, I just erase everything. I erase all my indicators. I erase all my support and resistance levels. I erase everything and I rechart. Okay, but please take note, this is how I trade. Okay, this is my trading style. Not all traders trade like me. This is how I trade, and this is how I have remained profitable, and I plan to continue this way. If one day I stop being profitable, I will sit down and I will ask myself, what the heck is happening? Why am I losing? What's happening? I will go and review everything. Any advice about indicators? There are hundreds of indicators out there. I think even thousands. You just need to use the one that works for you. I cannot tell you which one will work for you, but the one that works for me is Fibonacci. Technical analysis. When I'm talking about technical analysis, is Fibonacci Elliott wave price action. That means I look at price structures when it's making higher highs, higher lows. Okay, that is more important to me. Indicators to me is just a supporting tool, right? I do use RSI, stochastics, and moving average and volume indicator, but that's just supporting tools. I take it with a pinch of salt, right? They're just there to like give me support. So I'll give you an example. Let's say you go into a shop. For those who have been following my webinars for a long time, you hear this story a lot. But anyways, you go into a shop and you see a dress you really like a pink dress that you really like. So I don't know if that pink dress will look good on me, right? I don't know if it's gonna look good on me. That's why I go and get confirmation by my indicators. Okay, I asked my mom, hey mom, do you think this dress looks good on me? And my mom's like, yeah, that dress looks good on you. So I asked my brother. My brother's like, no, it doesn't look good on you. My dad is like, yeah, it looks good on you. And my sister's like, no, the pink doesn't suit your skin tone. So do you see how when you ask different indicators, it's gonna give you different opinions, right? When you ask different people, it's gonna give you different opinions. For me, I only take trades when all indicators, all technical analysis, fundamental analysis, everything is telling me the same thing. That's the only time I take a trade, and that's why I only trade once a week, sometimes no times a week, and I still end up with like 10% profit. There's a month where I did one single trade, and that trade made me 10%. Okay, because that trade I did a 1 to 10 risk to reward. Everything was telling me it's a buy. No matter what indicator I use RSI, stochastics, the news, everything is just showing me it's a buy. I get in for a buy, I make 10% in one single trade, I'm done for the month. I could still trade if I want to, but I don't usually trade once I hit my target. It's bad to have a target, by the way. You shouldn't be having a target. You shouldn't be having a target. This is part of trading psychology, because if you have a target, let's say you have a target to aim 10%, but you only did 6% that month, you're gonna end up over trading. So having a target is also bad. It's just that for me, I was like, okay, I'm kind of happy with my 10% this month, so I'm just gonna take a break now, right? So that was me. Okay, so the next thing, that's what the first thing I was talking about, which confirmation bias. You use different things to give you confirmation, like technical analysis, fundamental analysis, and just whatever you can use that is reliable. Okay, don't use random indicators that random people just created yesterday and it doesn't make sense. Okay, use things that actually are proven. Okay, so the second thing, which, sorry, I took this photo from Google. That's why it's saying things that I'm not even going to talk about. But yes, the second thing is anchoring bias. So this happens when you stuck on one price level or one idea and can't let it go. If you are having that problem, you have a problem letting go, you need to take a break. Go out with your friends, go to the spa, watch a movie, go to a cafe, go for a jog. Whatever it is, you need to stop. You need to stop if you have a bias and you cannot let it go. Okay, my bias depends on what the charts tell me. I never decide where the charts are moving. The markets trade trillions of dollars in a single day. Do you think it's going to mold to your decision making just because you decided that it's going to go up? Gold is not going to go up just because you think it's going to go up. Gold is going to go up because the markets want to go up. So if you have a bias that, oh, this pair is going up, it's clearly doing a downtrend, and you keep thinking it's going up, and you keep getting in a trend and you keep losing, obviously you're wrong, but you still want to believe that it's going up. You need to stop. You need to go and take a break. You need to come back in 2 weeks. Okay, you need to come back another day. Stop trading. I have a friend who has a rule where if he trades and he loses 2 trades, or is it 2 trades or 3 trades in a row, he stays out of the market for 2 weeks. This is pure discipline, guys. If you don't have this kind of discipline, you're not going to make it in trading. I can tell you that much, right? You need to get your mindset in the correct place. Okay, so the next thing will be recency bias. Is it even in here? Okay, it's not. Okay, this is when your last trade has too much influence on your next decision. Your last trade was a buy for gold. Now you keep wanting to get in for a buy. Okay, if your last trade was a winner, you feel confident thinking that it was a buy, and now you refuse to get in for a sell, even though price has done an obvious trend reversal. Okay, so you feel overconfident, you think that you can't lose, and you risk more. If your last trade was a loser, you become fearful, hesitant to enter, even when the setup is perfect. In both cases, you're letting one event distort your judgment. You need to release, you need to detach emotionally. Do you see how these biases creep in? They're subtle and they can absolutely wreck your consistency. Recognizing them is the first step to breaking free from them. You really need to be very, very conscious, and you really, really need to be very, very disciplined when trading. Okay? Okay, moving on, emotional bias. Okay, let's talk about this. First is the loss aversion. Psychologists have proven that people feel the pain of losing twice as strongly as the joy of winning. Can you imagine that? How weird humans are? They just they like to self-sabotage. It's so crazy. Right? Why you feel lost, you feel the hurt, you feel so much hurt when you lose twice in a row to the same level of winning one time. Okay, you guys need to stop that feeling. You just need to detach. I think I've heard someone said this before. Your ability to last in trading is your ability to be okay with losing. I heard someone say that before. Okay, I've got a question here. Can meditation or mindfulness actually improve my trading performances? Okay. Yes, and yes, if it works for you. So many top traders practice meditation, mindfulness, and like all the I'm sorry, I'm not gonna say mumbo jumbo, sorry. A lot of traders use mindfulness, a lot of meditation and whatnot to get that winning trade. I personally don't. I just follow facts. Okay, why? Because to me, trading is a very logical game. Do you know there are certain things that are so logical? Trading, coding. You know, coding is such a logical thing. It's like if blah 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 blah, then blah 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 blah. It's the same for trading. If moving average is showing me this, then it means that price is going up, right? Everything is logical and systematic. So I don't know why people are like bringing in all these voodoo things. I mean, that's me personally, okay? I cannot speak for all the YouTubers and all the traders out there who are like implementing spirituality into their trading. Trading is such a logical game. Can you imagine someone on Wall Street burning incense like spirit gods help me be profitable? I cannot imagine that happening because trading is such a logical game. So to answer your question, meditation and being mindful will help you. If it helps you get mental clarity, it will help your trading psychology, then yes, it will help you. But I personally don't do it because I have reached a point where if it doesn't follow my rules, I don't do it. If I don't see a trade, I go for a walk. If I don't see a good trade, I watch TV. If I don't see a good trade, I hang out with my friends. If I don't see a good trade, I go swimming. Okay, that's for me. If this is not happening, I'm just gonna go do something else. I'm not gonna sit and dwell on my phone, on my computer, and like, oh my God, I should have gotten in on this trade. Oh my God, I was right. I should have. Yeah, don't stop it. Okay, the next is gambler's fallacy. This is when you believe that after a series of losses, you're due for a win. Like you lose 7 trades in a row. You're like, okay, I lost 7 trades in a row. The markets have taken enough from me. On this 8th trade, I'm gonna make it. How does that make sense, bro? If you lost 7 trades in the war, has it ever occurred to you? Do you ever sit down and ask yourself, maybe my strategy is not working? Maybe something I'm doing is not working. Maybe I need to work on my entries. Maybe I need to work on something. Please don't have that gambler's mindset where you're like, okay, I'm due for a win now because I've lost so much. Please stop it. Okay, each trade is independent. Just because you lost 5 times in a row doesn't mean the 6th time will magically be a winner. If it really magically becomes a winner, trust me, you're not going to win the 7th time. This bias tricks you into revenge trading and over risking. Okay, so finally, there's overconfidence bias. This one usually shows up after a streak of wins. You feel unstoppable, like you've cracked the code, and suddenly you start ignoring the rules. You increase your lot size and skip confirmation. You think the markets can't trick you. I'm too good for the market. And bang, one wrong move and you lose everything. I know someone who spent 2 years building their $200,000 portfolio and they lost it all in a week. How can we be assured with authentication of trading platforms? Thank you for asking. A lot of these platforms are actually verified. Sorry, not verified, like certified. Like Vantage is a certified broker, for example. Okay, so yeah, just a simple Google search, you'll be able to see if the brokers are reliable or not. Okay, so if you're having all these problems, please stop it. Please go for a walk. Okay, overtrading, FOMO, and impulse control. Let's start with overtrading. Almost every trader has fallen into this trap. Not me, I trade once a week. Sometimes I don't trade at all. Sometimes I wish I don't have to trade trade for the month. Sometimes I wish I find one good trade and I take it and then I go to sleep. Yeah. Okay, I don't have this problem now, but I used to have this problem when I just started as a trader. Okay, I have gotten to this point where I don't see the point of overtrading because overtrading will just bring me losses. Why don't I just take one good trade that makes me good 10% instead of taking so many trades and then I still end up with like 2% negative in losses? Okay. So overtrading is when you're taking far too many trades, often without proper setups. It usually comes with 3 things: greed, frustration, and boredom. For me, the problem is boredom. When I'm bored, I do overtrade sometimes. That's why I now just watch Netflix. I actually watch so many series on Netflix now because I'm like, oh wait, I'm bored. I feel like I want to overtrade. No, don't do it. Go and watch Netflix. So I go and watch Netflix. No, don't do it. Go hang out with your kids. I go hang out with my kids. Like, why are you going in this crazy cycle? Just go do better things. Make memories. I hang out with my kids and I take so many photos and I'm so happy, right? Okay, so think about it. Maybe you just had one losing trade and you feel like you need to win it back immediately. That's frustration. Or maybe you feel like you've got one big winner, you feel invincible, you start opening trades after trade. That's greed. And sometimes the market is quiet, you're bored, and instead of waiting patiently, you jump into a random trade just to feel like you're doing something, just to feel productive. You're not being productive, okay? The danger with overtrading is twofold. First, it drains your account because you're not being selective. Second, it drains your energy. Trading is mentally exhausting, and when you overtrade, your brain gets fatigued, your judgments get cloudy, and your discipline falls apart. So a question you should be asking yourself is, have you ever reached the end of a trading day, look back at your history and thought, wow, how did I take so many trades? Okay, go and review the trades that you take. Most of them weren't even part of your plan. That's the over trading trap, and that's the one of the fastest way to burn out as a trader and to lose your account fast. So let's talk about FOMO, fear of missing out. It happens when you see the markets making a big move and you panic because you think, if I don't get in now, I'm going to miss the opportunity of a lifetime. Trading is a marathon. There are trades happening every single day. People are making money every single day. If you miss out today, you don't worry. Don't have to worry. There's trades tomorrow, okay? There's trades next week. The markets are always going to be there. Stop. Stop with the FOMO. Stop with the fear of missing out. Stop feeling guilty because you didn't get in on a winning trade. Okay? You should have JOMO, which I have placed there, joy of missing out. You are happy that you didn't overtrade because you spend that time watching Netflix. Now you are up to date with all the series on Netflix, okay? So it happens when you scroll on social media and you see a trader posting their wins. I bought a Ferrari, I retired my mom, and your rational brain says, wait, I'm going to go on break. Your rational brain goes on a break, and then your emotional brain screams, don't miss it. I need to jump in now. I need to get on this trade. I need to retire my mom. I need to like make 100,000 a month. Stop it. Okay, stop. That's not realistic. Stop it. Okay, you need to be very logical. If you are not a logical person, I'm gonna break it down to you. You're not gonna make it in trading. Okay, you need to be very, very logical. Okay. Okay, impulse control. So, or rather the lack of it. Impulse trading is when you enter a trade without following your plan, without confirmation, purely because you felt like it. It is when you tell yourself the chart looks bullish, let's just buy, and I think it's going to reverse from here, let's just short from here, and then you're just in and out and in and out. No plan, no structure, just a knee-jerk reaction. Impulse trades often happen in high emotion situations. Maybe you just took a loss and you want to immediately fix it, or maybe you saw a huge candle form and your adrenaline spikes and you click that buy or sell without thinking. The results, more often than not, you're gonna regret it and you're gonna lose money. So impulse control is one of the hardest skills to master in trading or in anything in life. It doesn't matter if you're trying to lose weight, it doesn't matter if you're running a business, it doesn't matter if you have tasks you need to finish. Impulse control is important because it requires patience and self-discipline. It requires you to pause, breathe, and ask yourself, does this trade fit my plan, or am I just reacting emotionally? Okay, if the honest truth is the impulse trading feels exciting in the moment, but it's disastrous in the long run. Professionals don't trade based on feelings, they trade based on rules. If you want consistency, you need to build a pause, that moment of reflection into your process so you stop trading on impulse. Okay? I don't know if, let me see. Simon, are you still with us? Okay. Yes, okay. I think you really needed this one, and I hope it helps you in some way or not, but you need to take a break. You need to go and watch Netflix now. Come back in a year. Maybe, no, sorry, maybe a year. Come back in 1 month after you have refreshed your mindset. I remember a point of time where I was losing so much and I just did not want to admit that I was losing so much. I don't know why it didn't occur to me to sit back and ask myself, wait, I'm losing so much. Is there something wrong with my strategy? It's such a simple question, but I just don't know why I didn't ask myself. Instead, I told myself, no, no, no. Okay, it was just that one time. Try again, try again, try again, try again. No, stop trying again. You need to try to look at your strategy. You need to try to see what is wrong. I'll talk about this. It's something really personal to me. Okay, so my husband and I have been married for like 5 years now, and we actually rarely argue. I can count the number of times in our entire marriage that we have argued. Because we are both very logical people, I am very grateful for that. We are both very logical. Anytime we have a problem, we would actually list down the problem and come up with a solution together. Right? It sounds so straightforward, right? But I just don't know why. When I was younger and when I was with other people, I never thought of just laying down the problem and sitting down and coming up with a solution together. Instead, when I was younger, there was so much miscommunication, there was so much fighting, there was so much anger, and there's so much like guilt tripping, there's so much right? My previous relationships were like that. But then when I met my husband and we're both so logical, it does not make sense to scream. It does not make sense to raise your voice. It doesn't make sense to argue about anything. Anytime we have a problem, we literally, I swear upon my life, we take pen and paper, we write down the problem that we are both dealing with that in our marriage, and then we come up with a logical solution together, and we rarely argue, and we are both, I think we are happily married. Yeah, so it's very logical and it avoids a lot of conflict. So you apply that to anything in your life. It doesn't have to be trading, can be your marriage, it can be anything. My husband and I, as a couple, we own 8 businesses together, and we apply this to our businesses as well. Anytime we see a problem, like anything wrong with our SOP, we sit down and we write it down. Okay, so one of our businesses in retail, and we have to do deliveries, and then we say, okay, so the delivery is not getting to customers, blah, 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 by then, and then we just list down the solutions. I have the highest level of ambition on earth. I never give up. I have trading plan. Every time I follow daily profits, 10 dividend, but I don't have patience. Yeah, maybe the meditation will work for you. Maybe the meditation will work for you. It sounds like you are someone who you are a very capable person. It's just that you really just need to work on like taking breaks, staying away. You sound exactly like my friend. My friend has a 97% win rate in trading. That's so crazy. Do you know how crazy that? He's made like hundreds of thousands of dollars from trading. Maybe he's already made $1 million. I don't know. He's made so much money from trading, but he also has a problem with staying out of the market. But eventually, he's the guy that came up with the rule. If I lose 2 trades or 3 trades in a row, I am going to stay out of the market for 2 weeks. And then for 2 weeks, he just stays out. He just does other stuff. He goes hang out with his friends. He goes traveling. He goes like do random projects for 2 weeks. And then he comes back after 2 weeks. You just set an alarm, and then you come back when the alarm rings, right? You just have to, you sound like a very capable trader. It's just that you really need to work on staying away from the market, right? You'll probably make way more profits than me, right? It's just that I'm not very greedy. Like everything to me has to be calculated risk. Like it needs to make sense to me. I try to be a very mellow person. I don't like the excitement. That's why I trade once a week. Okay, so yeah, good for you that your strategy is working, just that you need to work on being able to stay away. Okay, so why do you need a structured trading plan? A lot of traders think I'll just trade what I see and I don't need to write anything down. But the truth is, without a plan, you're at the mercy of your emotions. Every trade becomes random, inconsistent, and driven by how you feel in the moment. A structured plan is like a safety net. It removes emotion, decision making, because you already know the rules you're supposed to follow. It increases consistency because you apply the same process trade after trade instead of guessing each time. So the most important thing is it makes you accountable, not to me, not to anyone, but to yourself. Think about it. Pilots have a checklist, right? Right. Right. I mean, you think about it. If you just follow everything logically and systematically, there shouldn't be a problem. You think about, okay, pilots, doctors, surgeons, they have a checklist. Even, I think, athletes as well, they all have a structured routine and before a game. So why should trading be any different? If you are going on an operation table and you want a doctor to be following all the SOP and all the rules, do you not want to apply that same thinking and the same decision making into your trades? Because this is a career. This is your income. This is your business. Trading is your business, and you need to treat it like a business. And to treat it like a business, you need to follow the rules that the business has, right? It's the same for people. I'm sure there are a lot of people here who have like 9 to 5 jobs, right? If in your 9 to 5 jobs, if you are late, you are going to get in trouble. If you don't do a certain job by your deadline, you're going to get in trouble. There is always consequences to your actions. So it should be the same for trading. Okay, so let's talk about two building blocks of a plan: journaling and rules. First of all, journaling, most traders underestimate how powerful it is to simply write things down. A good trading journal is not just numbers, it's record of your thoughts, emotions, the reason for every single trade. You write why you enter, why you exited, and how you felt, and what is the outcome. Over time, your trading journal will become a mirror. It shows your patterns, the good and the bad. You might realize that every time you break your rules, you lose, and every time you perform well, it's because you're following the rules. Secondly, a trading plan without rules is just wishful thinking. It's basically gambling. Rules define how you enter, how you exit, and how much you're willing to risk. It is your entry, your stop loss, and your take profit, and even how many trades you take per day or per week or whatever it is. For example, I only risk 1% per trade. I never risk anything more than 1%. It's crazy to me how some people can risk 50% of their account. I personally cannot do that. Okay, I only do 1% per trade every single time. Even if I'm feeling greedy, even if I'm feeling, oh man, if I risked more, I would have made more profits. No, 1% means 1%. No means no. I have a 2-year-old toddler, by the way, and I tell her this all the time. No means no. There is no way around it. Don't try to negotiate with me. No means no. Okay? Maybe you should treat yourself like a 2-year-old toddler. When your 2-year-old toddler is trying to climb on your kitchen's counter, trying to grab a knife because you know that it's dangerous, you're gonna stop the 2-year-old toddler, right? If your 2-year-old toddler is going to jump off a really high platform, you are going to stop the 2-year-old toddler. Maybe you should stop yourself, the 2-year-old toddler in yourself, when you are going to do silly things in trading. Okay, so these rules protect you from yourself, because in the heat of the moment, it's so easy to ignore logic. Rules create the guardrails that keep you safe. Okay, so finally, let's talk about resilience, because no matter how good your plan is, you will still face losses, setbacks, and tough days. It's just the nature of trading. The difference between those who succeed and those who quit is resilience, the ability to take a hit, learn from it, and keep moving forward, right? Yeah, so resilience means that accepting that losses are normal, not taking them personally, and not letting them destroy your confidence. It means focusing on processes, following your plan, journaling your trades, managing your risks, instead of obsessing over whether the last trade was a win or a loss. It doesn't matter, the last trade is over. Stop looking at it, okay? Ask yourself this: what do professional traders do differently from beginners? It's not that they never lose, they lose all the time. It's that when they lose, they don't spiral out of control. Okay, they don't become crazy. They don't throw away their plan, and they don't double down in revenge. Okay, they take the loss, log it in their journal, learn from it, and move on to the next opportunity. That's resilience. It's the mindset that keeps you in the game long enough to let you play out. And at the end of the day, trading isn't about winning every trade. It's about surviving long enough with discipline and resilience to let consistency compound in your favor. Oh, by the way, guys, I do admit that I still have some problems with discipline. Both my husband and I, my husband is also a trader, but he's very busy with our businesses, so he doesn't trade as much. He's actually a way better trader than I am, but he's also a way better business person, entrepreneur than a lot of people. That's why he's focusing more on the business. My husband and I has made a rule: anytime we make X amount of number in trading, we immediately move it to a safer asset. Okay, so yeah, we actually just purchased our 5th property last week, worldwide, yeah. And those were profits from our trading. So anytime we make X amount of numbers from trading, we immediately move it into something safer. And that is the kind of discipline you should be having. And that's how you keep profits. So even if today I burst my entire account, I lose everything, I would have already still kept some in property. My husband and I are both very aligned in this, where like we make this amount, it moves. I don't care. Take it out from the trading account and move it into something safer. Okay, why? Because, like I said in the disclaimer, trading brings very high risk. There's so many risks. What if you suddenly go crazy and you lose your account? What if someone hacks your account? What if something? What if you lose everything, right? Move the money to something safer once you make some money. Okay, so thank you, everyone. That's all I have for you guys today. Take care. I hope you become profitable in trading if you're not already profitable. If you are profitable, I hope you get to keep your profits. I hope you're not just profitable this week and next week you give everything back to the market. Okay, follow Vantage on Facebook, Instagram, X, LinkedIn, and Telegram. Will you please send the recording? I join a bit later. I think, does anyone know if anyone who's in attendance here, Vantage sends the recording to us personally, but how do I send it to you though? Do you wanna like email me or something? Then I can try to send it to you. Okay, here. This is my email, or you can just go on at Gmail, okay? So SYNYIE@gmail. Okay, or you can just go on whatever platforms here, and then you can contact Vantage directly to get the recording from them. Okay, if you guys are wondering why I say to contact them directly, remember at the start of the webinar, I said that I am from a research firm. So Vantage invites us to do these webinars for them. So anything that is back end, I don't really know. So that's all I have for you guys today. Take care, guys. Have fun. See you guys again next week. Okay, bye. Take care.